Vice President Kamala Harris says that she wants to raise taxes. More specifically, she wants to raise taxes on certain individuals. She wants to raise taxes on investors, and she wants to raise taxes on corporations. That way she can help fund certain tax breaks and tax deductions. Earlier this year, I did a breakdown on Joe Biden's tax proposals, and I did a breakdown on Donald Trump's tax proposals. And obviously, the Joe Biden tax proposal video is no longer valid because he's not running for re-election, which is why I'm making this video. If you haven't seen my breakdown of the Donald Trump tax proposal, I will link it for you down in the description. And today I'm going to break down Kamala Harris's tax proposals in 3 different parts. Number 1, I'm going to talk about her changes in the individual tax plans. Number 2, I'm going to talk about her changes for the investment taxes. And number 3, I want to talk about her proposed changes for corporate taxes. So let's jump right in with the individual tax changes. When it comes to your individual taxes, there are 4 main changes that she's proposing. Number 1, which has to do with buying a house. Number 2, with childcare. Number 3, with taxing tips. And number 4 is, of course, your income tax. So let's go through this in order. Starting with number 1, Kamala Harris says that she wants to give up to $25,000 in down payment assistance to first-time homebuyers. More specifically, she wants to give $25,000 in down payment assistance for the 400,000 first-generation home buyers or home buyers who don't own a home, and up to a $10,000 tax credit for first-time home buyers. The second thing she wants to do is raise the child tax credit from $2,000 to $6,000, meaning if you have a newborn child, you can get up to $6,000 in tax credits. And by the way, the Trump administration wants to raise it from $2,000 up to $5,000. Third, she said on her campaign tour that she's interested in removing the income taxes on the money you make from tips. So if you're a barista, a waiter, or waitress, and you're making money in tips, that would be beneficial for you. This is similar to what the Trump campaign has said as well. And then number 4, which is probably the biggest change, is she wants to change some of the income taxes that you pay based off of the money that you earn. So let me wipe this off and show you what that means. This is what the current tax rate is in 2024, so you can compare it to her new proposal. In 2024, if you make under $11,600, your top tax rate is 10%. If you make between $11,600 and $47,100, your top tax rate is 12%. If you make between $47,100 and $100,500, your top tax rate is 22%. If you make between $100,500 and $191,900, your top tax rate is 24%. If you make between $191,900 and $243,700, your top tax rate is 32%. If you make between $243,700 and $609,300, your top tax rate is 35%. And everything over $609,300 is 37%. Now, this is marginal tax rates. That does not mean that if you go from making $47,000 to $47,200, your tax rate goes to 12%. What this means is if you make $50,000 a year, the first $11,600 is taxed at 10%. Then between $11,600 and $47,100, your income is taxed at 12%. And for the $2,900 over $47,100, you're going to be taxed at 22%. So it's marginal tax brackets. The more money you make, the different bracket that it falls in. Now, the reason why these tax rates are lower than what they used to be is because back in 2017, Donald Trump, when he was president, passed the Tax Cut and Jobs Act, which lowered the tax rates. And they're set to expire at the end of next year. And it seems that Kamala Harris wants to let this expire so the tax rates would go back up. So let me show you what the tax rates would look like if this Tax Cut and Jobs Act were to expire. This is what the tax rates look like before the Tax Cut and Jobs Act. The bottom tax bracket was still at a top rate of 10%. Then this one went up to 15%, 25%, 28%, 33%. This stayed at 35%, but then the top tax rate also went up to 39.6%. So tax rates for the majority of Americans do go up if this act were to expire, and it looks like Kamala Harris does want this act to expire as a way to raise some more taxes. Now, I gotta remind you that although I am a licensed attorney, I'm not your attorney because I'm just a random guy on YouTube. So if you have specific financial questions, please talk to a licensed advisor in your area. And if you're looking for a good licensed advisor, I've partnered with the team at Money Pickle, who is the advertiser of this video. Money Pickle has an amazing network of financial advisors, licensed financial advisors. And if you go through their form, it takes just a few minutes to fill it out. They will match you with one of their vetted financial advisors, and you will get a free 45-minute consultation with one of the financial advisors. Now, of course, they're going to try to sell you their services. You're absolutely not required to purchase. However, if you get value out of it, there's something you can consider. If it's not something that you want, you can say no, or you can say you need some more time to think about it. So if you're looking for a financial advisor, you can get teamed up with the network that Money Pickle has to offer for free with the free consultation. So if you have some money that you're looking to invest and you just want some guidance from a licensed financial advisor, the team over at Money Pickle can connect you with a vetted and licensed financial advisor at no cost, and you can get a free consultation with them as well. So if you want to try it out for yourself, it only takes a few minutes, and I got the link to how you can learn more and do that with their sponsor Money Pickle down in the description below. Minority Mindset is a paid partner with Money Pickle, so if you use them, we will get compensated, but there's no additional cost to you. And Money Pickle is not a financial advisor themselves. They vet and find the financial advisors and they connect you to them. So again, I got the link for you down in the description. This brings us to the second part of this video, which is her proposals for investment taxes. The first change that she proposes on investment taxes is raising the top capital gains rate to 44.6%, and second, creating a 25% tax on unrealized capital gains. Let me break down what this means. Right now, if you were to go out and invest in a stock, and this stock goes from $100 a share to, let's just say, $10 million a share, you just made a lot of money, and if you sold it, you have essentially $10 million worth of profit. Now today, the top tax rate on capital gains, meaning investment income, if you own this for longer than 1 year, that's what you need to qualify for long-term capital gains. You have to hold on to this investment for at least 1 year. The top tax rate for these long-term capital gains is 20%. That's the top tax rate today. What Kamala Harris is proposing is raising this from 20% to 44.6%, which means instead of paying 20%, you'd be paying more than double that. The second thing that she's proposing is creating a 25% tax on unrealized gains for certain high net worth and high earner individuals. Let me explain what that means. What an unrealized gain is, if I make an investment into the stock and it's worth $100 a share, then some time goes by and now the stock goes up in value to $1,000 a share. On paper, it looks like a 10x my money. On paper, it looks like I have $1,000, but this is unrealized gains because I haven't actually made any money. I only make money if I sell. And what Kamala Harris is proposing is this unrealized gain should now be taxed at 25% for certain high net worth and high income earning individuals. Now, of course, there's a risk here because there's a risk that this could go back down to $100 a share or $0 a share. But the whole argument here is that you have a lot of wealthy people that are sitting on these unrealized gains that are seeing their net worths explode, but aren't paying any taxes on this increase in net worth because they don't actually have an income. It's just an increase in their unrealized gains. So the proposal is, if you have income and assets that exceed $100 million, then you would be subject to this 25% tax on unrealized gains on your investments that you haven't even sold. And the third major proposal is to raise corporate tax rates from 21%, which is where it is right now, up to 28%. So let me show you how this works, because corporate taxes are a little bit confusing because corporations follow what's called a double tax rate. So let's assume that this is the corporation right here. And the corporation makes money by selling certain things. They sell markers, and now they have $1 million worth of profits right here. Now, this is where the corporation would have to pay this corporate tax. Now, this corporate tax, if it's 28%, would be 28%, which would leave a little bit over $700,000 into the corporation's bank account after paying their corporate taxes. Now, you might think that the owners of this corporation now get to pull out the $700,000 free and clear because they've paid this corporate tax, but that's not how it works. If you own this corporation, I'm gonna draw a nice mustache for you, and for my female followers, I'll draw a braid. By the way, in my native language, Punjabi, we call a mustache a much and a braid a gut. Now, if you own this company and you pull out this $700,000, you have to pay taxes again on this money at the individual level. That's what we talked about in the first part of this video, which is your individual tax rates. So you have this layer of tax here at the corporate level, but then you also have this layer of tax here at the individual level, because now you're gonna have to report $700,000 worth of income, and now you gotta pay taxes on the $700,000 worth of income, which was also what we discussed earlier here. So there are three major layers of tax proposals that the vice president is promising. Number one is changes to the income taxes, which is the income tax rates that you pay on the money that you earn, which also comes with a potential tax credit if you want to buy a home, which also comes with potential higher tax credits if you have a child, and also comes with potential no taxes on tips. Then the second thing that she's proposing is raising taxes on investors, particularly high income, high net worth investors. And if you're making a lot of money for your investments, while also adding on an unrealized capital gains tax, which is a tax on money that you haven't earned. And then the third thing that she wants to do is raise taxes on corporations through this corporate tax change right here. Now, I would like to hear from you. Do you think this is a good thing or a bad thing? Let me know down in the comments below. The former President Donald Trump says that if he's elected president, he will make some sweeping tax changes, which include number one, cutting taxes for W-2 job earners. One of the things that really caught headlines is he says that he wants to cut or eliminate taxes on tips, which would benefit bartenders and waiters. Number two is he says he wants to extend the tax cuts for big corporations